Most traders lose money because they trade breakouts completely wrong. Today, I'm going to show you a swing trading strategy that actually works step by step. This is the exact setup I use to catch explosive moves in the market, and if you master it, you'll never have to second guess your trades again. You see this move? The stock went up over 100% in just 4 days, and the strategy caught it perfectly. Let me show you exactly how it works. First, let's go over the pattern that makes this strategy so powerful. Alright, let's break down exactly how this strategy works. Setup is simple but extremely powerful. First, we need a stock that made a big move, which is at least 30% in the past 3 months. So this one right here made 200% in 42 days, which is basically exactly what we look out for. Then, instead of chasing, we wait for a consolidation. Consolidation typically happens after a stock made a big move up, which gives the stock time to catch its breath before starting another run. Basically, consolidation happens when a stock makes lower highs and higher lows, and we can see that those are highlighted by the green trend lines that I put here to make it visual for you guys. A good trend line only happens when 3 price points touches it, because if it weren't the case, then you could be drawing trend line anywhere you want between two candles. After we wait for the consolidation period, this is where the 10 and 20 SMA comes in place. On my chart, those are highlighted by the purple and blue line, the purple being the 10 and the blue line being the 20 SMA. As we can see in this example, the stock went over and under the SMAs a good amount of time. But the important part is when you get towards the end, which means that when your trend line are getting tighter, you want your stock price to stay above both of these SMAs. Once the stock is breaking out of its range with strong volume, that's our entry. As you can see in this example, the stock gapped over its higher trend line, and its volume was a lot higher than its averages. Now, let's talk about managing your trade. Most traders lose money on breakouts because they do one of these things, and I guarantee you've done at least one of them before. Mistake number one is jumping in before confirmation. If you buy too early, you risk getting trapped in a fake breakout. Let me show you all an example. Alright, so let's say you see this, you think it's going to break out. I mean, it tested the higher trend line 2 times. Stock price is above all SMAs and volume is a little bit above average. You think it's going to skyrocket tomorrow. So you enter the position today before breakout, thinking you're going to get a bigger result by entering early, but you get stopped out. And trust me, it happens more often than you think. See, this is just one example, but if we go a bit further on the same stock, right here, you think it's going to break out again, and it falls. And then it goes higher again, and then it falls. I mean, it just happens all the time. And if you enter before confirmation, then you risk getting sucked out, which can lead to major losses if you don't manage your risk properly. Mistake number two is ignoring volume. If a stock isn't breaking out on higher volume, then a move is weak and is more likely to fail. Alright, so if we take this example on GME, we can see the stock gapping above its trend line, which is basically a breakout. But if we look at the bottom of the chart, we can see that the volume did not increase and is still at the average. What happens next is you get stopped out, and since the move is weak, it goes back inside this previous range. And then it broke out again, but still the volume increased. So you get stopped out a second time on the same stock because the move is weak and it reversed. I used to make these mistakes all the time until I fixed my entries. Let me show you a real trade example so you can see this in action. Alright, so I'll get to BBI again since this is a trade I took last week using this exact strategy. Alright, so what we see here on the left is called the breakout day. So it happens when the stock is breaking out of its range. And on the breakout day, when you see the stock opening above its higher trend line, this is where you load up your 5-minute chart. So on the left is our daily chart and on the right is our 5-minute chart. What you need to be looking at is your first 5-minute candle. So once you know that a stock is breaking out, this is what you need to look out for. So you need to look for the high and the low of the first 5-minute candle. Once you identify it, the low of the first 5-minute candle on breakout day is usually the low of the day, and the high of the first 5-minute candle is your entry. In this case, the high is at 475 and the low is at 446. Then, when the stock price rises above the high of the first 5-minute candle, this is your entry. So you enter the position when it rises above. Then, right after you enter, you set up your stop loss at the low of the day, which is 446 in this example. Then you're done for the day and it's 10 a.m. And as you can see, we weren't stopped out because we wait for confirmation on the first 5-minute candle. Then what we do after we enter the position is basically waiting. I usually wait between 2 and 5 days before taking some profit. And as we can see here, the stock ended up going a lot higher. So what I did in this case for my first price target is I went to the weekly chart. I looked at this previous high, which is at 6.77. I put a range here, went back on the daily chart, and when the stock reached this price, I trimmed 40% of my position and I moved my stop loss to break even. So now we're basically risk-free and we've already assured some profits. Usually I trim my positions twice. First is a 40% trim and the second time is a 20% trim. In this case, for my 20% trim, I waited a bit longer, and if I'm not mistaken, I took some profits around 8. So now we've made almost 70% on the move, and we have zero risk. At this point, what I do when I have 40% left of my initial position is basically that I manage my stop loss manually with the 10 SMA. And what I mean by that is fairly simple because I will sell the rest of my position when the stock price closes under the 10 SMA on the daily chart. So as you can see, I'm still in this trade. This is the actual stock price at the time of this video. And currently the 10 SMA is at 563 and it will continue to go up as the stock price is rising. So let's say it continues to go up and the 10 SMA reaches around here, then the stock price will start to consolidate. And one day, if the consolidation period is long enough, it will close below the 10 SMA, which will be our exit. So of course, this strategy doesn't give you the actual top of the move, but it gets you pretty damn close. See how simple that was? There's basically no guessing, you just follow your plan. And with how simple and effective this strategy is, this is something that can completely change the way you trade. I actually have 3 other trading strategies that I use, and if you want me to break them down in future videos, let me know in the comments. Also, for a more visual person, I have a full PDF guide that covers everything about this strategy, step by step. If you want me to share, drop a comment below and let me know. By the way, I alerted this exact BBAI trade in my WAP community where I post real-time entry and trade breakdowns. If you want access to it, you can try it free for 7 days with a link in the description. And if you want even more trading insights, I post daily tips, trades, and analysis on my X or Twitter, so make sure you follow me there as well. If you found this helpful, drop a breakout in the comments and let me know what strategy you want me to cover next. And don't forget to subscribe because my next video will show you the exact scanner I use to find these trades and setups in minutes. You won't want to miss this. Lock in, stay disciplined, and I'll see you in the next one.